Right, time for Futures in Focus. Oil trading near the lowest closing level in 7 months. What's going on? Joining us now from the CME, Deming of KKM Financial. Dan, are we close to finding some stability, close to finding a floor here or not?
Well, I tell you, Mark, short term, I think the jury's still out. When you look at the chart patterns, when you look at the pressure on oil prices, you're seeing a downward declining pattern. When I look at lower highs and lower lows, and a channel that it could a break below 43.80 would indicate a further downside in the short term. So we have to kind of hold here. We're holding in that 44.60 level right now. We saw a low of 44.40 earlier this morning. So we're finding a little bit of stability here, but I think the jury's still out on that.
Is the strong dollar playing into things today, Dan?
I think it's having an impact. I mean, it's a confluence of a lot of different things, Mark, but I think that, you know, we saw the OECD information came out yesterday indicating that supplies are higher. Certainly the International Energy Agency, the IEA, is indicating that, you know, the supplies are a little higher than they anticipated at this point as well. So it's a confluence of things, but I think certainly the stronger dollar will have an impact on that as well.
Dan, I'm looking at Fed fund futures, just talking about the Fed and the probability, the implied probability of another hike this year, looking at Fed fund futures through the end of this year is less than 50%. Do you expect the market to move closer to the Fed in coming months?
I think that it's possible, Mark. I know what you're pointing at. You have to go all the way to December, really, to see about a 40% chance of a hike. Even in November, September, November, they're still indicating a very low probability of a hike. So I think that, you know, we'll have to see. You're seeing a flattening of the yield curve here. The indications today are we're seeing a little bit of a rising rate environment. We saw the 211 low print on the 10-year, now back at 216. So there's a little bit of an updraft here. But overall, it's still the expectations are, I think the market's discounting the fact that the Fed's going to move even one time in the coming 6 months.